Hello, it's Mr. Intermarket Analysis bringing you a review of the FTSE 100. Okay, so basically I'll be trying to see where this market is going into Monday's trading, which is the 11th of November 2013. Okay, folks, so the FTSE, okay, where art thou, FTSE? Okay, so basically what's happening with this index at the moment? Okay, so weekly chart. We can see we have a double top type scenario here. Okay, you've got topping tails and obviously a doji there now on the weekly, so certainly a cause for concern. Okay, one thing that I was looking at whilst I was mentoring a student today was the actual inverse relationship, should we say, or not even inverse, but the relationship, whether it be linear or non-linear, given the obviously we adhere to intermarket analysis with that and sterling. Okay, so which is quite interesting. So as you can see here, sterling is at a key critical juncture on the verge of a potential breakout as well. So if I just draw a line for you here, or a trend line here, as you can see, critical juncture here on the verge of a breakout, which along with obviously the FTSE 100, which I've just shown, is at a critical juncture as well. So just something to keep an eye out for, okay, and watch with regards to it going forward. So on the verge of a breakout. So they generally do say where a strong economy equals a stronger currency. Therefore, obviously, a sustained move higher in sterling, obviously based on strong economic data that's been coming out as of late. Obviously, higher interest rates, etc., etc., could actually make or break the FTSE. So, if it is going to, remember, there's three types of reactions in terms of currency trading. There's a fundamental trade, there's a risk trade, which is obviously known as a QE trade, or the QE junkies love it, okay, or the carry trade, shall we say, and then obviously you have the fair trade. So it just depends on which way the market wants to react. So right now, at present, as you can see, there's a fundamental trade, so i.e. stronger currency, stronger economy, obviously the FTSE is marching higher, okay, so just keep an eye on that relationship. That's something that we're going forward, okay, and also the Euro GBP as well. I can't elaborate on that in this video, it'll take too long for me to do so. So let's just keep it simple for all the viewers out there. Okay, so weekly chart. Okay, so weekly chart, obviously we can see resistance. We know that 6750 up to 6850 or anywhere around that region is definitely going to hold a solid resistance. Okay, so let's go to a micro or smaller time frame. Okay, so we've technical analysis states that previous resistance equals support. Obviously on this occasion that's exactly what happened. We had a bottoming tail on Friday. Obviously, given the fact that the jobs report was stronger than expected in the US. Now, I did get caught out here, which I've already explained, I think, in the previous video, where initially I went long on the FTSE itself because previous, obviously, resistance equals support, and obviously the deep setup in the daily charts were quite bullish, given the fact that we had an IHS formation. Okay, now on this occasion here, now we've got a bottoming tail, although this isn't super bullish. Why? Because the fact that it paced it intraday, and we did, obviously the bulls defended it going into the close, which obviously is quite interesting. Now, the only concern that I have is I've got different sort of accounts on my Reuters icon platform. I have the FTSE closing below 6700, whereas my Pro Real Time, obviously I've got it closing above 6700. So 6700, obviously. Okay, so that's something that we really need to keep a focus on for now. So 6700, 6660, if them two are breached, basically once they breach, then we basically have the bears back in control. Okay, so let's look at the smaller time frame now with regards to the FTSE itself. Okay, but actually whilst we're here, we can quickly have a look at the FTSE 250 and look at the larger time frame. As we know, FTSE 250 resistance is held at resistance level, fails to break higher. Remember, the fuel for the FTSE itself is the FTSE 250, given the fact that it's small caps. Okay, so just keep an eye on that. Obviously, previous resistance equals support. So far, so good. But the fact that this isn't moving higher itself and is obviously being obedient to resistance is a worrying sign for the FTSE 250 going forward. Okay, now let's look at these smaller time frames. Okay, so 60-minute chart says it all really. Okay, basically HNS formation. Okay. We had this key, obviously, purple trend line, previous support equals resistance on this purple trend line. Obviously, the market's moved lower. We've had a lower high registered here. We've had a lower low registered here. This could be again another lower high, given the fact that it's a Fibonacci retracement. 50% previous support equals resistance. The right shoulder is in. The HNS target itself is the unfilled gap below, which is at 6570. Keep an eye on that. 6620 is a projected target for the H&S formation going down. Okay, we are retesting the neckline, so as we know in technical analysis, if the neckline is tested, it acts as resistance. Okay, so therefore this level here between 6720, 6730 will be solid resistance. So myself, I will certainly be playing the short trade as soon as we kick off tonight. I'll be looking to short this market and look for a further downside. And obviously I want that 6620 target to be hit on the downside. Okay, so that's what I'll be looking at and focusing on. Obviously we did have a short squeeze, a monstrous short squeeze on Friday, which unfortunately got stopped out at 6731, although I did ride the rally from 6660 region higher. Okay, but obviously I got stopped out with my stop loss, when my shorts were averaged around the 6690 level. So again, I'll be looking to short this. I can't see any reasons why this should certainly be going higher, other than the fact that we had obviously manipulation Friday. Obviously the Yanks love to manipulate the markets going into the weekend, and we should get a flush today. Okay, so obviously given the fact that the Iranian situation obviously has broken down, that's a geopolitical concern going forward. Obviously higher oil prices now, which I've projected in my previous video, obviously that again will be negative for the markets. Okay, so yeah, with regards to this, keep an eye on that. Okay, H&S formation testing the neckline, down we go, making a lower highs at present. We've created a right shoulder. Okay, so you've got the gist there. 10-minute chart. Okay folks, what do we see here? So 10-minute chart, this is the pattern that I was playing on the long side. So as soon as the NFP data came out, I had a short in the euro, which fantastic, minus obviously it fell minus 70-80 points. I nailed about 60 points of those on the downside, and then obviously I nailed the upside on the FTSE as well up to gap fill. Okay, so that's something that we keep an eye out for. Okay, I did take my last third around the gap fill region. I didn't expect gap fill to be for the market to sustain and move past gap fill, because I was long Nasdaq as well, and the Nasdaq itself came into resistance and wasn't enjoying the rally until later on, when the Yanks started to manipulate the markets higher. The bloody twits. Okay, so they really do make day trading harder for me, and obviously it makes it harder for me to educate and obviously teach my students as well. I can't teach people how to play manipulated markets. I can do that if I wanted to, very easy for me to, and it probably would be a very lucrative strategy itself. That alone would probably nail 200-300 points a week, but that's not my style. My style is to teach individuals so they can fish for life. Okay, so I need to teach you skills, tools, educate you from a fundamental technical perspective, so that you're empowered, you educate yourself, and you can go out there and fish for the rest of your life. And hopefully one day you set up your own websites, you educate people, okay, and you empower people as well. Obviously all my students, that's the aim. They have their own Twitter handles with 2,000, 3,000 followers. They have their own YouTube videos, etc., etc. The better they do, the better I do. Okay, because a teacher is only as good as his student. So my job is to create trading machines. Obviously, they then go on and pass the baton to the next generation, and that's how traditionally in the East, that's how education works. It's oratory way of teaching, where one student or a teacher passes it to a student, and that student then obviously keeps that knowledge alive, and knowledge is passed on. It never passed on from book to book. That's irrelevant, because there's a famous saying of a sage in the East. Once he was traveling in the East, and this chap was renowned to be very educated. Shall we say he had a knowledge of 1,000 books, etc., etc. But he didn't have that written committed to memory. Nor did he teach a student to pass it on to the next generation. It was all on his donkey, and all the books were on his donkey, and a bandit came and said to him that I'm going to take away your knowledge. And he said, how can you take away my knowledge? And the chap said to him that I'm going to take away your donkey full of books and confiscate it, and you will no longer have that knowledge. So what knowledge is, how good is that knowledge to you, that which I can take away from yourself? So as individuals, we need to commit that to memory. So he then decided, this individual then realized that he was not knowledgeable, he was ignorant. So he committed everything to memory, and then he passed that on to the next generation, from one student to the other. And that's the aim that I like to do, and that's the tradition that I like to follow. Okay, that's the aim, folks. Okay, that's the aim. That's the wisdom behind these videos as well. Hopefully that people obviously learn the way in which I trade successfully. I've been last 6-7 years now. I've been nailing 200-300 points a week consistently, week in, week out. My highest weekly count is 769 points in a week. Okay, an average, like I said, I nail about 200 points. Last week I was 200 points at one time. I was almost 300 points at one time. but unfortunately, given the ECB and the volatility, etc., I ended up with 110 points last week. And the week before, almost 400 points. So that's how it is, folks. Okay, it's about teaching and educating people in real time, sharing your trade setups like I'm doing right now in advance and also in real time. This is exactly what I do in the live analysis service. I take the trades, I send out my text message on my entry and exits. I can do that via WhatsApp to international subscribers. I do it to domestic subscribers via text. Each time I enter, I exit. I give my stop losses. I give my targets. I give commentary. I give analysis, so that them individuals can learn in real time and obviously empower and educate themselves and eventually become independent. Okay, so that's the aim. Okay, so with regards to the 10-minute chart, obviously we had inverted head and shoulders formation. The target, the neckline here, as you can see, is around the 6680. Neckline, the head below is 6640. We project on the upside 6720. Like I said, I only expected gap fill, so I hope to put my hand up there. I was wrong. Okay, but there were various reasons for that as well. Okay, of which I can't elaborate in these short videos. I can go on and on and on, honestly. Okay, so with regards to, but that's the knowledge of, that's the wisdom of intermarket analysis. It gives you the ability to understand the market. I can describe every single move that happens in the market with almost 100% confidence and accuracy. There's not many people that can say that. Okay, I understand every nook and crook, every move that's been made in all the currency markets, the commodities markets, the indices. I will have, anybody were to ask me why did this market move X, Y, Z, within 10-20 minutes I'll have that information. Okay, the only time that it's lagging is when you get fundamental news, etc. Once you look at intermarket analysis, everything makes sense instantaneously. So if you realize why the market's gone higher, then you also know why the market will go lower, and vice versa, and you can correct yourself very quickly given the obviously the relationships at present. So for example, I'll give you an example. Okay, Friday we had NFP data. Everybody thought, okay, strong economic data came out in US, therefore tapering is on, therefore stock markets would sell off because of QE trade and the QE junkies would go cold turkey. Okay, yes, that's correct. Okay, so that didn't happen. The opposite happened. Stock market rallied, the dollar rallied, and the market moved higher. Why? Because the relationship has changed. The relationship now, historically, was the dollar. You were playing the carry trade there, the dollar would get spanked, the markets would inflate higher. Mr. Bernanke was happy. QE1, QE2, QE3, it's lost its potency now. That drug, it's like a drug. It's just like the running man at Arnold Schwarzenegger, the running drug. Okay, so that drug has worn off now. The chap has come off the steads, shall we say? Okay, and now the steads is on the Japanese yen. The Japanese yen is on steroids. Okay. And that obviously has been helping the markets inflate. So whenever the Euro JPY went higher, whenever USD JPY went higher, whenever the yen got spanked, okay, Japanese Nikkei would rally. That would again push futures, US futures, global futures higher because it's the carry trade, so on and so forth. And the markets will inflate higher, okay. So that was a barometer. Now the game has shifted, and I'll tell you that now the game has shifted. Why? Because it's all about the euro now. When the euro goes higher, stock markets will sell off. Mark my words. When the euro goes lower, stock markets will rally. Why? Because that's the next Kool-Aid. Okay, that's where all the steroids are coming from. So keep an eye on that. Okay. Okay, folks. So on this occasion here, IHS formation 6720 is a resistance. Remember, whenever a market hits IHS formation, it has a long squeeze. So all the longs get out of the market. And obviously we've got previous support equals resistance at 6720 and the 200 MA resistance there. Okay, so certainly my call for Monday, going into this week, we will get a pullback on the FTSE, and given the fact that we have lower lows, lower highs in the 60-minute chart, certainly look for that gap to be closed at 6620 level.